Hey, everybody. Happy Sunday evening and welcome into our latest TDR Small Cap Sunday podcast. Tonight's theme, a share buyback show. We all look at it as investors and we see executives buying back some of their shares of the company. That's a good thing. Or is that the case in every single situation? We're going to break it down and highlight 4 new small cap stocks that you may not be aware of and why they've grabbed our interest. So with that, let's welcome in TDR lead analyst Bill McNarland here on a Sunday evening. Happy Sundays as always. Good to see you. How was your week?
Oh, it was a great week, great weekend celebrating Day of the Dead. Great weekend to reflect on those that have passed on before you
Yeah,
and what their life meant to you and how you can take in the knowledge that they shared with you through time.
well said. I like how you started with that. But did you save some time this weekend? I forgot that we had to turn our clocks back an hour.
Yeah, absolutely. That's always a lot of fun.
It's always good, I
Get an
guess, when
extra
you get
hour.
that hour back. The only part I don't like, and I still hate that we do this, but it's just I don't like the idea that it gets dark around 6 o'clock. I don't. What times it get dark around your time now?
Oh, I think it's going to start looking dark around 5.
5. Yeah.
Yeah.
I hear you. But look, we've got a U.S. election coming up this week. Big week coming up, to say the least. As we cover the cannabis space, we also cover small cap stocks. Let's hope a new administration can get these small cap stocks flipped around and performing a lot better, because the last 4 years, as we've alluded to in the last few months in this podcast, they've been hit hard. But let's see how things basically materialize over these coming months. But first things first, as always, all views on the Small Cap Sunday podcast and the guests on this podcast are pure the opinion. You should not treat any opinions expressed by us or guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. Okay, we've got a share buyback show. A lot of times, and like I said off the top, really most of the times, investors feel confident when management announces they're buying back shares with the company. Should investors always feel this way before we get into some of these companies, Bill?
Well, it's a huge positive sign, just like, the negative gut feeling you have when you find out a company's diluting by offering more shares. Um, it's very positive when the share count is shrinking. And the great thing about it is in these scenarios, just think about it when a company says, "Oh, we've grown our revenue by 20%."
Yeah,
Well, if you dilute it by 20%, that's flat.
right
But
back to
even if
square
a
one.
company, yeah, if a company says, "Oh, we didn't grow our revenue this year, but we bought back 10% of the float," that means the revenue's up 10%.
Yeah, well
So
explained.
it's something a lot of times people just look at the top number, but it's good to always be adjusting it for what the share count is doing.
All right, with that, let's begin with our first company here this evening. They operate in the $1.5 trillion U.S. auto loan market industry. A company called Consumer Portfolio Services trades in the NASDAQ under the ticker symbol CPSS, located in Las Vegas. Current share price $10.01. Market cap $207 million. Shares outstanding 21 million, and daily trading volume 326,000. 52-week range for the stock ranges anywhere between $7.03 to $12.04. So with that, let's learn about who they are, Bill, and some of the recent achievements, I guess, and challenges they faced, as we know, as we're in this lovely interest rate environment over these last couple of years.
Yeah, so this is an interesting business. I like this space, the subprime lending. People, one thing that was noted to me before years ago, looking at these businesses, is that people will usually make their payments to get their car, even if they have to do other sacrifices,
It's
because they need
crazy.
something to drive every single day. And it's something very important. And so people will pay higher interest rates to make sure that they have a vehicle to drive it. So
Well,
there's a big market for this.
yeah, it's crazy to what extent they'll go to, because we always know when you buy a vehicle, it's a depreciating value as soon as it leaves basically the lot that you buy it on. But some of the interest rates I found here is between 14.8 and 25.8%. So outside of the obvious as to who their consumers are, meaning obviously people that are wanting to own vehicles, how does one manage to afford these rates? Because these are some pretty extraordinary rates, to say the least, when owning a vehicle.
They make it happen. So there's a couple things in the industry that have changed in the last decade. Is vehicles are much more reliable for longer periods of time, and so because of this, people can have longer amortizations, and the
Yeah.
car doesn't fall apart. They can still drive it. But people just make it work with those payments. The other thing too is with inflation and also because there were supply chain challenges, cars haven't depreciated as much. And so because that, you don't have as much per mile to pay for the vehicle. So it can work out for individuals. But they make it work. But what's interesting about these businesses is every day they get a huge amount of applications that they can
Yeah.
also buy from third parties, and they have to sort through them. In the old days, people would quickly be going through Excel trying to figure it out, but now they can use AI applications to help them sift through and pick the absolute best files to lend on. So that's what's changing in that industry. But I was very interested in the company because they bought back 3% of their float last year with excess cash that they had.
Okay, good to know. So they've seen actually a decline in revenue, but could we see, I guess, the tables reverse quickly in the coming months based on rumors of interest rates being slashed?
Yes. So there's a 97% chance of interest rates being cut this Thursday based on analyst consensus. And Bloomberg is predicting that we're almost at 100 basis points by the spring. And we
Wow.
should come down a whole over 200 basis points, hopefully by the summer. So this is going to change things for them because a lot of the loans that they gave out are fixed rates, but their cost of capital, a lot of it's variable and will go down, which will increase the revenue that they earn off their spread. So their revenue is down the last year, but the last 3 years they've been growing at 5%. This looks very positive with the change of interest rates, and this is why management is confident and they think that it makes sense to buy back shares.
All right, with that, let's go to the charts. And what are we seeing first as far as revenue for the past 12 months, along with growth percentage for this company?
So the revenue is $188 million in the last 12 months. It dipped by 21%. And we know that this is because of the economy and also the interest rate environment. But over the last 3 years, they've had 5% growth a year when you look at the whole 3 year period. So I believe that with the falling interest rate environment and the consumer, out of the reports we've seen the last few months, looks strong,
Yeah.
stronger than expected. This is very beneficial for this business, and this is likely why management is buying back shares.
Yeah, I think you're going to see a big turnaround in the automotive industry. I know there's a lot of vehicles that are now available. And does that benefit a company like this, knowing that supply and demand was a huge issue in the early days of COVID from a couple years back?
Yeah, I think there's more consumers that are coming up. We know that there's a big upgrade cycle is
Yeah,
coming in vehicle purchases right now,
yeah,
and that also affects the used market as people sell their used vehicles. So I think
exactly.
there's going to be a lot of demand still, and if consumers are confident, we've seen this out of the University of Michigan sentiment numbers that came out this week as well. The consumer is feeling confident.
Okay, good to know. Gross margin, that really grabbed my attention. 100%. What's up with that?
I'll share this. These businesses are kind of similar to REIT businesses. They're a little bit misleading. What they do is most of the money that they make comes in and is calculated as their gross margin, and then their SG&A is artificially high as well, their cost of their business. But it's a spread business. You have a cost of capital and you lend it out and you earn a spread. So as
Yeah,
long as there's a spread between those, that's what's important. And they have a spread over 7%.
gotcha. EBITDA, would it come in at?
Yeah, it was flat. So I think in the negative year that they had down, coming down 21% in revenue, they still had flat EBITDA. They weren't coming into a loss. So I think that's a positive for what they were going through with the economy and the increase of interest rates.
Okay. All right, let's move to balance sheets now. Current cash position is showing what, and how about working capital?
Yeah, it's $9 million. Their working capital is $2.5 billion. This is correct, but it's a
Yeah,
little overstated just because the way that their lending is considered. They have longer term deals, terms that they're lending money on, but then they're taking money in at a variable rate. So it shows different. It makes this, but they have cash in the bank and they have a positive breakup value, but
yep,
the working capital is a little overstated just because of the industry that they're in.
gotcha. All right, let's now look at their cash flow statements. Levered free cash flow came in at what?
Yeah, it's $213 million. So that was
Wow,
very positive just because they were
wow.
moving around how their book is structured, their balance sheet. But this is very positive. They have a credit rating of 8.8, which we don't always mention unless it's something shocking, either good or bad. So this
Impressive.
is a strong business. I think the economy is moving in the directions and interest rates for them. People always need cars. I believe, management is correct in buying back shares, and this is a good sign for investors.
How much did you say they bought back again? Was it 3%?
Yeah, they bought 3% of the company was retired in the last 12 months.
Gotcha. All right. So it sounds like with the positive momentum it's moving forward, not only for the company, but the overall industry. Would you own this stock? Appears that we're going to have a green check mark.
Absolutely. I like where they're going. I like the timing of the economy, and I love when management's buying back shares.
Yeah, of course. All right. So there's your first green check mark. Consumer Portfolio Services trades with the NASDAQ under the ticker symbol CPSS. Let's move now to our second company, which you described as it's like kind of like the IKEA of lab supplies, a company called Kewaunee Scientific, trades in the NASDAQ under the ticker symbol KEQU. It's out of Statesville, North Carolina. Current share price $31.62. Market cap 91 million. Shares outstanding extremely tight at only 2.9 million. Daily trading volume is 1.11 million. 52-week range. It's a big one here. Ranges anywhere between $16.51 to $55.62. Big gap here, Bill.
Yeah, this is an interesting company. Came up on my radar because of the buyback, but there's a huge demand long term for lab growth. And I have a chart here. Arns will put up. We can see globally of how big R&D spending is and how it's increasing globally. So if you're going to spend money on R&D for healthcare development, drug development, you need equipment, and the universities that are educating the students need equipment. And so this is a big growth area for specialty companies like this to be able to execute on. And it's going to be keeping growing to be $3.6 billion. Sorry, $3.6 trillion in 2027, or 3.6 billion, sorry, in actual furniture in the spending.
Yeah,
So it's a huge market.
you describe this company as in mature growth, and why not? They've been around for 118 years. So they're a real picks and shovel type business, right?
Yes, I love that. It just, you know, investing in biotech has some risk on it, but supplying the equipment is fabulous.
Yeah, 118 years. Wow, long time. All right, let's now move to revenue the past 12 months along with growth percentage. What did we see and find?
So it's $91 million. The revenue, or sorry, the market cap's 91 million compared to revenue of 202. So
Okay.
it's significant revenue. The growth was down a little bit last year, and there was some hiccups still with supply chain issues, and also a bit of a slowdown just economically in general that they noted. But in the last 3 years, it's been growing at 11% a year on average. So with the increase in the total addressable market, I expect that this is just a momentary blip in their history.
So when we look at biotech, like when we look at some of the industries we covered, like psychedelics, would they have a need for something like this as far as lab supplies? Yeah.
Absolutely. You just can't again order equipment from IKEA, for example. There you
Yeah.
need specialty everything with furniture and stuff. And so the companies need to go to a specialty vendor for this. And
Yeah.
so this they've had a long history in doing this. And so this is one of the top names that you would go to if you're building a lab.
Yeah, what I like in the medical field too is they don't waste any time. They make precise decisions because that's how they're basically trained in medical school. But when it comes to stuff like this, the equipment is not cheap. I know a lot of people are actually in sales with this, and they do. And that's an incredible career, especially if you have certain regions in certain viable areas with a highly populated, dense audience in certain parts of North America, but they do extremely well. But regardless of price, that's what I always find is that in the medical field, biotech field, it's like precise decisions are made immediately, which generates obviously in big revenue for a lot of these companies. Okay, what do we find as far as gross margin?
Yeah, the gross margin 26%, which
Yeah,
is healthy. It shows you that this is specialty, that it's not something that they're competing on high volume and low
yeah.
margin. And their SG&A is 19.6. So they still have salespeople that go out and make the calls and such. But there's a nice spread there, which produced an EBITDA of $16 million last year.
Hmm. 16 million balance sheet, current cash position, 24 million I'm seeing in working capital. Grab my attention. Currently sitting, what was it at? Sorry.
56 million dollars. So we have no concerns here. about the strength of the company, especially with the positive income.
Wow, that's
So
impressive.
if we are on the board, what are we going to do with this extra cash that's coming in? We're going to say, okay, let's consider buying back shares. And they bought back 2.1% of the company last year.
Last year, 2.1%. And why the share float so tight? 2.9 million. That's what's grabbing my attention too.
Yeah, they're just just based on the market cap of where it's at, it's going to keep getting tighter. It's going to go down and down as they're buying back companies
Yeah,
or
no
buying back
kidding.
shares. So it's that's what we want for companies to get their share count reducing.
Yeah. All right. Cash flow statement time. Levered free cash flow came in at what?
$7 million last year. So there's
Okay.
no red flags came up with this business at all.
Okay. Just for a quick reminder for some of the new viewers, if you're looking at levered free cash flow, what is it the numbers that you want to basically look at and stand out to you that says this is good and this is obviously something that you need to be precautionary of approaching with?
Well, we want it to be positive, for sure. So this is after all things have happened in the business. What is the cash flow looking like? And then also, I like to look at it as a ratio of how much the market cap is. So they have $7 million of cash flow with a market cap of $91 million. So
Yeah,
that tells us it's trading at about 12 times cash. That's very reasonable.
of
And
course.
this is also cash after they've spent on things like research and development, after they spent maybe building a building, which would be a capital expenditure. So this is the true cash you have left at the end, which is very different from looking at EBITDA or adjusted EBITDA, which is not really the cash flow. So this is the real situation that's showing us whether or not a company is healthy.
I remember the early days of Canadian cannabis. Price to earnings ratio was north of 50. It was crazy and
Mhm.
wild, but yeah. Okay, last and moment of truth. Would you own this stock?
Absolutely, I like it. I like again, it's a nice pick and shovel business, and they're buying back shares, long history, and I like the growth of the total addressable market.
That's good. All right. Sunday night, TDR, Sunday night podcast, small cap Sunday podcast. Shad Dale's here with Bill McNarland. If you're logging in right now, we're doing a show based on share buybacks and 4 companies that you should watch. And is always a good thing as we dive into it. We got 2 green check marks right now: Consumer Portfolio Services and Kewaunee Scientific, both NASDAQ traded stocks, green check marks. So if you got a chance to, or if you did miss the first, make sure to scroll back after this is done and have a look and hear what we have to say about the companies and why they've grabbed our interest. All right, now let's move. Continue on the NASDAQ trend here tonight. Third company, it's an MLM company, otherwise known as a multi-level marketing company. It's called LifeVantage Corp. Trades, as I said, on the NASDAQ under the ticker symbol LFVN. They're out of Provo, Utah. Current share price, $12.22. Market cap, 153 million. Shares outstanding, 12.7 million. Daily trading volume is a million, and 52-week range is $4.20 to $14.71. So they're kind of flirting in some ways with their 52-week high here, Bill. What's what can you tell me about this company?
Well,
I see a
this
smirk
is a
on your
company.
face.
Well, it is a company that uh, deals in health and wellness related areas of natural products. So,
Okay.
in a way, it doesn't have the same concerns when you do a study or you make a claim like you're doing a mental health medicine or something like we see with, like, for example, psychedelic companies. But they have natural products that can help people with things like weight loss or
Hmm.
improving your skin.
Okay.
Some of them have studies which aren't as rigorous as we see when we go through trials of an FDA process for a licensed medicine. And then they people market this one on one. They come to your house, they visit you, and they show you
They
these
visit you.
medicines, or they visit you. They come and show you the benefit of these products. It's a model that I'm still surprised
Uh,
is thriving in today's age, because often these products have a we'll see when we look through the financials are marked up, and there's a lot of places you can buy products. But I'm fascinated. I wanted to look into it because I saw they're buying back,
yeah, yeah, yeah.
and I drive a lot down Interstate 15 through Idaho and Utah, and I see these massive campuses of MLM companies that have these huge head offices and fields of acreages, supporting the lavender that they grow for their essential oil. And I
Really?
just sit there and I see all the money involved in it. And I said, I want to look a little deeper. So this came up on my screen because they're buying back shares. That's very positive. I said, well, let's look a little deeper.
Hmm. So when I look at this company, they operate in 20 different countries. They serve, is it 125,000 active accounts? Am I getting that right?
Yeah, and so you have a subscription and and their claim to fame is the fact that a lot of it's renewable revenue. So they didn't just buy you one product, but instead it's like Amazon. People signed up for subscribe and save that every certain period of time that they're getting repeat business from it. And they also have digital tools that make the sales process easier. So that's how they position themselves as a modern MLM company.
Goes to show the power of the weight loss industry. That'll be around to the end of time, won't it?
Yeah, for sure.
So who's their ideal demographic here? Like, are we talking, is this all over the map? I would think.
It's older, but they're trying to move into more influence and social media and such that younger people would be buying. But
Yeah.
this is more an older demographic, a way of purchasing products.
Tack the baby boomers, right? The vulnerable in
Yeah.
some ways. But I guess key markets and countries. Do you have any ideas to where they're operating in?
Yeah. It's around the world, so they have a lot of it in the U.S. and Japan, but a lot of it is in the Western United States,
Okay.
in the regions that I see the success of some of them while driving.
Are there flaws with some of these multi-level marketing companies? Like, is there any example that you could maybe provide?
Yeah, there's been a lot have been challenged through the court system and the SEC
Hmm.
about whether or not they actually were a business for where people could actually legitimately make money, or whether or not this was some type of pyramid scheme.
Hmm.
So those have went back and forth. Some have been successful in those claims, some haven't. Some hedge fund managers have bet their whole career on shorting these types of businesses. Bill Ackman has made a huge
Yeah.
part of his career in talking about this and his thesis that many of these companies will collapse. But when we look at the financial statements, especially the income statement, we'll see some clues about some vulnerabilities in their business model.
Well, do you remember the whole protein shake isogenics? I had probably
Hmm.
7 or 8 people at one point. This is probably going back 7, 8 years ago. That were almost like team leaders selling product for isogenics and wanted to get me on. It's just like they were part of a cult. They would go to these, events, conferences, they'd get the speaker on, get every people all revved up. And it's like you're working within the company. And like you said, there were subscriptions involved. But is it something ideally like that? Is that yeah. Okay.
That's exactly what it is, right?
Yeah. That's interesting. Wild, wild side of business. Not something I'm part of, but goes to show there's big dollars involved. Let's go to the charts now and
Yeah.
income statements. What do we see as far as revenue here in the past 12 months?
So the revenue is real. It's $196 million. We can see it's declining. The revenue growth the last 12 months was down 8%.
Okay.
Over 3 years is down 3.1% a year.
Okay.
But it's the gross margin and SG&A that show us something. So
Yeah.
now this is similar to cosmetics, have huge markups and natural products, but 79% gross margin on selling someone something, that shows you how marked up it is. So if you buy something for $100, some type of, shake that people were pitching you, or some type of cosmetic or weight loss, it only costs $20 to produce.
That's wild.
But they have to really mark that up because they have all these sales commissions and stuff to pay.
Yeah. Wow.
And so we see out there SG&A here 77.1
Yeah.
of having to pay out the costs to promote that.
So gross margin 79.2%, but pretty much wiped away when you look at the SG&A, like you said, is steep at 77.1%. With that, what did the EBITDA come in at?
Came up at $9 million,
Okay.
and I think that it's still there, but their revenue is shrinking. But I think people will start to look, more competitively at products. And I'll give you one quick example. Now, if you like a product like theirs, you can take a picture of it with the ingredients to AI, and AI can help you suggest other lower cost products.
Oh, wow. Power of
Yeah,
AI. If you know what you're
it's
searching
unbelievable.
for, it's amazing how
Yeah,
powerful it's going to be, to say
yeah,
the least. But,
yeah.
well, it's all in the marketing dollars, hence the reason why they're a multi-level marketing company. So let's move now to the balance sheet. Current cash position and working capital shows what?
Yeah, so cash of 14.5 million, working capital was $16 million. The debt to assets is reasonable at 56. So you can see why the board was thinking, we should probably consider buying back some shares.
And they did, and what was the percentage?
They bought back 4.7% of the company.
Okay, good to know.
Yeah,
Cash flow statement, lever free cash flow came in at what?
9.9 million. So you can see
Okay.
why they were buying back shares. When I just look at this business, it's healthy at the moment. But I think potentially in our discussion and my research, I think the business model is flawed.
Yeah, I agree. Would you own this stock? I guess that's the last question. This is a
No,
interesting no?
I think it's so great that they're buying it back. At the moment, it looks healthy. But I think it's a flawed business model that I couldn't become passionate about.
Yeah, it's funny you bring this up because I remember, like, going back 7, 8 years ago, there was products, like I said, an example, Isogenics, but there were so many more. I don't know if it's something maybe I'm missing right now, but you don't see that sort of style of approach as much, from what I see, from what it was 7, 8 years ago, but, that's how much we've changed. But it's interesting to see as to what the future holds, not only for the company, but the overall industry, but you think it's relatively flat.
Yeah, and I don't like that
Mhm.
approach so much that I have a sign on my door saying,
No.
please don't knock or ring the doorbell because the baby's sleeping. And guess what? There's no baby in the house.
Yeah.
I don't want to be approached about this stuff.
Yeah, yeah. All right, so we got 2 green check marks and 1 X. LifeVantage Corporation, NASDAQ, LFVN, that's a no. Fourth company here this evening. It's a patent technology company that provides hospitals with opioid pain relief systems. This sounds really interesting, given how much the topic of opioids has been in the healthcare system for quite some time. It's a company called Zynex Incorporated, trades on the NASDAQ under the ticker symbol ZYXI, located in Denver, Colorado. Current share price $8.63, market cap 274 million. Shares outstanding are 33 million, and daily trading volume is 1 million, and the 52-week range is from $7.15 to $13.77. So as I said earlier, Bill, this company is a patent technology company providing hospitals with opioid pain relief. So what exactly and how exactly do they make these patents?
So this is not an idea, like you mentioned. This
Yeah.
is out there. So it's approved. They're selling it. They got a patent. And I know personally that it works because I had a bad injury 8 or 9 years ago from cycling. And I went and had something like this done. And it significantly got rid of my pain in a
Okay.
drug-free way. And
So no
so this is
addiction. This is drug-free way, completely separate from taking the traditional opioid. Because I remember my wife, she had surgery, like massive surgery, like 5, 6 years ago, and she gradually waned off of it after a couple of months. But often, how many times you hear these stories of people being on opioids for months, if not years, to become
it,
addicted?
it's awful. Like I know myself, I had a procedure about 18 months ago and I was on opiates for 4 days
Yeah,
and it was awful. Even the withdrawals were awful coming off after 4 or 5 days.
yeah. So
So it
what's the
just,
separate? Can you give me kind of an example as to how this
well, what
works?
this is, this is sending electrical pulses into your body. It's completely non-invasive. Has
Wow.
nothing to do with taking a pill. And so when I had it done, essentially they're just sending pulses and pain points into you. It's creating, and what it does is it just goes in the area where you're having the discomfort, and for whatever reason, it takes away the pain.
So are more and more hospitals aware of this and doing more of this, given the amount of, let's face it, bad news that opioids have basically received in the public for quite some time and in the media for quite some time?
Yes, and so it's an uphill battle that they have. They have to go out and they have to introduce it and show it, but they have the patents and they have the proof that it's working and people are interested in it. And we know that the growth market for replacing opiates is huge.
Massive, massive.
So this is a really intriguing area that they're in.
Do they have a flagship product?
Yeah, they do. So there's a couple of patents they have. They have Next Wave. That was similar to the product that I was referring to
Yep.
in the past that I made use of. And they're out with this, and it's completely drug free.
Wow. This is an interesting story because let's face it, the healthcare system is changing. When you think about the addiction, as I said earlier, with opioid addiction, you would think this would be front and center for a lot of medical professionals and how to wean people off and steer clear, but actually at the same time, have something that's effective for pain relief, but like you said, does not provide the addiction angle to it. So, how big is the overall market pertaining to this?
Well, the opiate market is huge. For this devices, they're being modest. They said that there's a $3.6 billion market for patent devices just like this in
3.6
some of their
billion?
monitoring. Yeah,
Wow.
so yeah, and in the pain relief, they felt it was about $950 million. So it's not just pain relief; they're also in the monitoring. They have another product for that as well.
Okay.
But I think these markets potentially, as they come out with new products as well, I think there's a huge market that this company is potentially addressing.
Okay, let's go to the financial incomes. Revenue past 12 months along with growth percentage showed what?
Yeah, so it's $193 million. Last year, the growth was modest at 4.2, but the revenue over the last 3 years was compounding at 32%. So
Okay.
it's had its ebb and flows. But remember, they're bought back over 10% of the company in the last year.
10.
So
Wow.
yeah. So when you buy 10% of the company back, that's boosting all your revenue numbers as
Okay.
well for the actual shareholder.
Gotcha.
So it's very interesting what they're doing here.
Okay. Gross margin came in at 79% and still SG&A, this is another big number, 75%. So what happened here?
They have to spend a lot to get the news out about this.
Okay.
So they're going around doing this. This is an expensive part of the process, but they have the margins there to support it.
How long has the company been around for? Do you know?
I don't have that offhand, but they went through the whole patent and process and such. So this is some time definitely that they've been working on this plan.
Okay. EBITDA showed what?
$13 million. So it was very solid there.
All right. Balance sheet, current cash position, healthy at 37 million, I'm seeing.
Yeah, working capital of 58 million. Assets, debt to liabilities being 71% is reasonable, and they have a credit score of 5.3. So this is a strong company in a
Yeah.
very interesting area.
I was going to ask you if you found out the credit score. All right. So final question here tonight. Seems like no red flags here. Would you own this stock?
Absolutely, I'm very interested in this area. I've experienced the negatives of opiates even just for 5 days, and I've experienced the positive of treatment like this before that was non-drug, and I'm a huge raving fan of it.
That's amazing, though. Level of sophistication that our healthcare system continues to advance, but this is a big one. We all know we've seen a lot of those documentaries with Purdue Pharmaceuticals on Netflix, and it's mind-boggling to think of what has happened, not only in the U.S. but Canada as well, and how many communities have been decimated by opioids. And if you're doing surgery and can actually steer clear of something like this, that's would you say the proper term is like, I guess, more a natural way versus actually
Well,
taking?
yeah, absolutely. It's a natural process. You can almost think that this is a high-end version of something like an acupuncture. They're just a
Gotcha.
way that they can manipulate something using electro pulses to be able to take away pain relief.
It's the first thing I thought of when you mentioned that and how it was processed. But, I've done acupuncture a few times. Not for everybody, but it was incredible for me. But there's more to life than just the Western world medicine, isn't there, Bill?
Absolutely. And the beauty of this is they have studies and patents to back it up.
Yep. All right. So we got 3 green check marks and 1 X. So what's the main takeaway here tonight when it comes to viewing companies that do share buybacks? If you could give kind of a takeaway here to our audience, what would it be?
Buybacks or delusions are not always bad or good. You still have to do some more research, but it's a sign, a big sign that probably something positive is going on with the company.
Yeah. And if you're up In sales, you said revenue 20% on the year, but you're diluting your share price or your stock share price allocation by 20%. You're pretty much flat.
There was no point making the press release about how well you were doing.
Knowing the story within the story, right, Bill?
Yeah, for
All right.
sure.
Listen, always a pleasure checking out with you. In the meantime, enjoy the rest of your week, and we'll see you back here next week, okay?
Take care.
All right, thanks. Hey, everyone. Thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So, again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel because in the end, we wouldn't be here without you. Thanks again, everyone.